Good morning and welcome to this episode of the markets for today. Today is Wednesday, February 14th, and I'm really glad you guys are here. So now what we're going to get into is we're going to get into the markets, and we're going to start the markets, start the charts right here. Okay, so the first thing we're going to look at is the biggest mover and shaker today. That is Bitcoin. Bitcoin is going up. And the reason why it's going up is these bans and stuff. They're starting to backpedal on this stuff now. How can they really effectively ban Bitcoin anyway, or ban cryptocurrencies in general? Can't be banned and stuff. They're going to advance. This is because the whole ledger can be stored on any one computer. To get rid of it, you'd have to get rid of all of the ledgers, and that's almost impossible. So what we're seeing Bitcoin on the rise again, 92.82 at Bitstamp. And this is expected by me, to tell you the truth. I expect Bitcoin is going to continue a very slow advance along with the stock market, which we're going to take a look at right now. And the stock market is up, no, that's Sweet Light crude oil. Where's my stock market? Here, Dow Jones. Okay, here we go. 24,689. It's up 48 points on the day. This is exactly what I'm expecting. Exactly what I expect. What we're actually making is not really a dead cat bounce, because I'm really kind of expecting it to make new highs or come close to its previous highs before the big crash. So a dead cat bounce would be if it fell now. From the price it is now, if it were to really fall big, say in the next week, before it makes it back up again, that would be a dead cat bounce. I'm not really expecting a dead cat bounce. I'm expecting a slow increase in the stock market up until the big crash comes. And believe me, the big crash is coming, and we're not far away from it now. If you've been following my work, you know that I'm predicting that the big crash is coming when the end of March, when the Fed raises it from 20 to 30,000. But I'm not absolutely sure about this. We could have it sooner, depending on how quick bond yields rise. So let's take a look at the bond yields today, and they're rising. So this is a foreboding sign that we could have the crash early before March, in which case this would be a dead cat bounce. The stock market would be a dead cat bounce if we have the crash early before March. And this is a possibility if these yields, these 10-year yields, continue to rise. They're at 2.89%. The critical factor would be if they go over, say, 3.1 or maybe 3.05. Once they crack 3, then we're in the critical area where we could get a premature crash in the markets. And this next crash is going to be a big crash. Now, I'll tell you what I'm expecting. Let's go back to the Bitcoin chart here for a second. I'm sort of expecting Bitcoin, when the crash first starts to happen in the stock market, to Bitcoin to do okay. Because a lot of people are going to be thinking to themselves, hey, you know, they're going to be in a mind frame of thinking, hey, you know what, run to Bitcoin. Stock market crashes, Bitcoin's going to go up. And this is what a lot of people are thinking, that's going to drive Bitcoin up. They're thinking Bitcoin is a store of value, and it's a great safe haven and all this kind of stuff. They're thinking, right? And they're thinking Bitcoin should go up when the stock market crashes. And initially it will, because they will actually drive it up, because they're going to be more speculative investment in Bitcoin initially. But it's in the later half of the stock market crash, when the real fear comes, that the first few people will start to question Bitcoin. And they'll start to realize, hey, you know what? They're frightened. They want real, honest God's money. They'll go to gold and silver, and they'll go into fiat, because fiat's been there since 1971, when Nixon took us off the gold standard. Fiat has been the gold standard, basically. And so that's a long time, from 1971 till now. These people, the whole generation, have grown up with fiat being the go-to. They want to go to cash. They want to hold cash. And so that's what they'll do. A few of them will drop out of Bitcoin, and they'll go to cash. fear will enter into Bitcoin because the fear that's in the market will enter into Bitcoin then, and Bitcoin will crash. And there will be so many people wanting to get out of it as fast as they can at that point. But it's going to be on the later stage of the stock market crash when the Bitcoin's going to crash. Now, we're going to take a look here at coin market capitalizations. And we'll see that the cryptos are doing good right now. They're all in the green. Litecoin, 27%. She's up. She's back over 200 bucks. Ethereum's up. Everything is going up pretty good, you know. It looks good. Monero up. Now that's a coin I really like, Monero. Ethereum Classic, it felt a good day yesterday and today, but it's still doing good today. It's up 4%, you know. So here's the thing. Let's take a look at silver prices. Silver's shooting up today. It's heading back up toward 17 bucks. This is a good thing. I like to see silver go up. The dollar index. Dollar index is down a little bit. 89.30. You know? And so this is what we got going on. Now, let's take a look here. It says, the brutal truth about violence when you have a shift. Now, this is an article on Zero Hedge, and they're going to talk about the shift. If you don't know what a shift is, it is SHIT hits the fan. When the SHIT hits the fan. You ever had a fan running, and if you threw a gob of poop into it, it spatters all over the place, and then you get the real stench. So it's a real stench, is basically what they're saying. And are you prepared for the extreme violence that's likely to come your way if a shift? No matter what your plan is, it's entirely probable that at some point you'll be the victim of violence or have to perpetuate violence in order to survive. As also, our go-to guide on shift reality checks, and this thought-provoking interview will shake you to your core. So it's talking about how prevalent was violence when there was a shift in Bosnia. And it's talking about the different things here about violence in a shift. Well, here's the thing. I'm not going to say it's absolutely impossible that we'll have a shift, but I've coined something new here, and it's not really new. I've coined a phrase, though. I've called it the holiday effect. And what the holiday effect is, it's like a bank holiday and stuff, when they close everything up. Now, I know there's a different type of holiday effect that affects the stock markets, but I'm talking about using the word for my own effective tool and explaining a situation that I think is going to actually happen. And this situation that I think is actually going to happen is that the banks and stuff are going to be blocked and locked, and everything is going to kind of fold in on itself during this deflationary depression that we got coming at a certain point. That's why they call it a deflationary death spiral. When that happens, you're going to actually see banks start to go under and large institutions start to go under. I say start to go under. What they're going to do is they're going to lock everything up. They're going to freeze everything. In fact, I think when that stock market dropped this last week or two, they almost had to freeze the markets. They come close. Well, they will freeze the markets. They're going to freeze all the markets. They're going to freeze all the banks. They're going to freeze all interbank lending. They're going to freeze, everything's going to go into a credit freeze. When that happens, it puts out the panic signal. But all of these institutions are going to close, and they're going to basically hold in the position like a holding pattern. Now, if they opened up before the problem is solved, then we would have an SHTF disaster. But as long as they stay closed, everybody is going to be waiting to see what's going to happen. The police will stay working. Your law enforcement, everything, your emergency services, everything will stay working. The power should stay up and running. But credit's going to be frozen. So basically it's going to be like this. You're going to go to the grocery store and you want to buy something, and they're going to say, I'm sorry, ma'am, but we're only taking cash today. They're going to say, well, no credit, and we're not using credit cards, and we're not using debit cards today. We're only using cash. And this is why I'm telling you to put away $5 bills for yourself, because this is coming during the credit freeze. Now, the credit freeze is not going to last real long. It's not going to turn into a shift because these government agencies are going to come in, they're going to have a big meeting, and then what they're going to do is the institutions that are in trouble, that are causing the credit freeze, they are going to go and they're going to pump those institutions full of money. They are going to yield to this. I know there's a lot of talk out there that say they're not going to yield and they're going to let it continue and stuff. It would boil down into an SHTF if that happened. And the ones who would be held responsible are these government agencies that will yield. And they know that. They're not stupid. They didn't get into office by being stupid. They're not stupid. They're a bunch of crooks and criminals, and they don't deserve to be in office, but they're not stupid. They know that they are on the line if this turned into a shift, that they would be held responsible. So they're not going to let it turn into a shift. When this freeze comes, this holiday effect comes, it's going to be like a big holiday. It's going to be like an extended Christmas holiday, and they're going to have meetings. And when they come through these meetings, everything's going to go back to being fine again. I got some sort of a thing on here that's causing me consternation. I'm going to close out these pages so I don't get that. It's some sort of pop-up or something. I hate that when that happens. It's very frustrating. Pop-ups, pop-up ads and stuff like that. So anyway, when this credit freeze comes, they're going to have the holiday effect, and that is what's going to keep everything from seizing up, from the system from seizing up, because they're going to inject money into it before they open it back up again. So when they open it back up, the problem's going to be solved. You see what I'm saying? When they open everything back up again. But at that point, confidence will be lost in the dollar, because what it's going to take to solve these problems, it's going to take money creation on a scale that we have never seen before, unprecedented money creation. They're going to have to use that money creation tool, and they're going to have to use it very, very effectively. And to be effective, they're going to have to open up the floodgates of money. And money will solve the problem, but it's a means to an end. It's going to bring an inflationary depression. It's going to bring what's called a crack-up boom. A hyperinflationary depression is going to come then. And that's going to cause more damage. It's going to cause a lot of damage, but it's going to cause the damage to a select few, not to the government. Oh, the government's going to love it, because everything's going to be paid for. They're going to be able to pay for everything and with worthless dollars. It's like a get-out-of-jail-free card. So the government's going to love it. The ones who are going to hate it are the savers in this country, the middle-class people who are deeply invested in the dollar. They're going to get cut to pieces. Seriously. People who have retirement savings and stuff like that, they're going to get cut to pieces. It's time to prepare now, because there's only a few months away before this is actually coming. And the reason why I can say with so much certainty that this is actually going to happen is because of an analysis of the situation we have, and you can see the progressive steps that lead toward this happening. Maybe I should do a show, because we're getting kind of late on this episode here. We're at 13 minutes and 54 seconds. Maybe I should do a show on the progressive steps that lead to my conclusion that this situation happening is inevitable. In fact, yes, I am going to do a show on this. And I'm going to go through the steps, a logical conclusion why this situation that's coming of hyperinflation is absolutely inevitable. I think I will call it hyperinflation inevitability or something like that, or inevitable hyperinflation or something to that effect. And I'm going to do a show on that. And it's probably going to be a fairly long show, because I'm going to go over the simple reasoning, and using reasoning and common sense, why we've passed the point of no return, that we're actually heading toward the hyperinflation, and there's absolutely no way out, and it's not going to be deflation. I'm going to explain why it's not going to be deflation. because I know there's a lot of deflationists out there, and they truly believe we're going to enter into a deflation. And in fact, we are. And this is one of the things that makes it so complicated to understand, is because we're heading right toward a deflation. And we're probably going to experience some deflation before the hyperinflation hits. But it's the deflation that actually triggers the hyperinflation. That's the trigger mechanism that makes the hyperinflation come all the quicker. If we didn't experience this period of deflation, and that is a possibility, although remote, we'd still have the hyperinflation. But it would take a bit longer to get here. See, we've been on the road toward hyperinflation ever since 1913, when a dollar was worth $1, and now it's worth less than 2 pennies. How long is it going to be down this road before the dollar's worth 0? If they've inflated away 98% of it already since 1913 till now. Okay, so listen, thank you guys for listening. Like and subscribe. We'll catch you in the next episode. Bye.